Those are a couple of stocks which are in focus, but in the meantime, there's been an 81% surge in Maharashtra cases in about a week's time. There's been a rise in 6 to 7 states. So how is that really impacting corporate as well as leisure travel? Let's welcome on board Rattan Keswani, Deputy MD at Lemon Tree Hotels Limited, joining in on the show right now. Rattan, hi, good morning. Good to have you on the show. Fears of a second wave, at least in particular states like Maharashtra, Rattan. Wanted to understand, while leisure travel surely picked up, at least in the peak winter months, how's corporate travel been? And is it still lagging behind as compared to leisure travel and from the pre-COVID levels?
Well, thank you for having me on the show. Let me break up my answer into two parts. There's worry of what's happening in Maharashtra and Kerala is definitely a cause of concern for everybody. Did business pick up in the previous quarter? Yes, it did. But it was a different kind of a mix that's a normal mix. We are seeing some sense of revival in the coming quarters, but we'll have to see how the wave kind of pans out in any other states. The unfortunate part is citizens seem to believe that the pandemic is over, and you can see that behavior whether in malls, whether in markets, or whether in hotels. I think it'll be a wait and watch, but the initial shoots have been fairly positive. Corporate has picked up largely through MSMEs and SMEs in the smaller cities, the tier 2, tier 3. It is yet to pick up in any form in the tier 1 cities, which is where the larger numbers lie, mainly because of the fact that everybody's still working from home. We do believe in our conversations with them that they seem to think that they will add in capacity into their offices sometime midsummer. But again, it's a wait and watch. Hello?
Okay. So what about average room rates? Are they still way sub the pre-COVID levels, or has there been some recovery there as well?
I think in the first 6 to 8 months, everybody was close to about 50-odd% under COVID levels during the last quarter. And now as we're seeing quarter 4, I think that average rates have picked up a bit more. So we're at about 30-odd% below COVID levels. Again, mainly because the mix of the segments of business is totally different. A lot of the segments that are moving right now will not be the segments that I think will continue from autumn onwards. But to get back rates up to pre-COVID levels will, I think, take us a better part of the year, if not about 14 to 16 months more. Occupancy should be in about the mid-60s by autumn. And maybe by the Q4 of the next year, we should see them coming back to pre-COVID levels of about 70-72%.
Okay. Rattan, hi, good morning. You opened 5 hotels as well, during COVID. So talk to us about the kind of plans that you have for hotels in Coorg, Port Blair, Dehradun, Mumbai, etc., and the total room count that you're looking at present.
So, it's been an exciting time despite the pandemic. We opened 5 before December. We hope to open maybe 6, maybe 7 by end of May as we speak right now. One of them will be our new brand, Aureka. We have an owned Aureka in Udaipur. This will be the first managed Aureka in Coorg. We will also open the managed piece, our first franchise in a Keys hotel in Dehradun, very close to our existing Lemon Tree hotel. We have openings in Mumbai. We have openings in Bhubaneswar. We have openings in a multitude of other cities, including resort locations as we go along. We will add into going into a resort location again between Mussoorie and some others. A lot of it is coming to a closure, but as you can all understand, the last bit of finance that needs to go in is a bit of a challenge for the owners. Fortunately, they've been able to pull together and the openings are coming together, but they're in varied locations as we speak.
Okay, fabulous. The company is also gradually moving to full functionality with the operational inventory increasing from about 71% in Q1 to 86.8% in Q2 and now 91% in Q3. So just talk us through those numbers and how much of a recovery you've witnessed in terms of operational inventory and what the outlook now is as well, considering you're already at 91% in Q3.
Almost at 100% recovery of inventory as we speak. A couple of hotels are temporarily, closed down, and we will open them in the next 1 month because we had a cluster of hotels and it didn't make sense to keep all of them open and keep, the costs in a spread. But in the next couple of months, the entire inventory will be open because we are seeing, green shoots and revival in every city that we are. And interestingly, in all the new hotels that we've opened, they've started off very well. So as I said to you before, we are seeing a bit of a revival summer autumn, which is come through because tier 2 and resort locations. As corporate travel picks up, I think the occupancies will improve to the mid 60s, definitely by autumn, and back to pre-COVID levels last quarter.
Rattan, do you think at a PAT level, you would take a while before you break even to pre-COVID levels owing to higher financing costs as well as depreciation costs?
So, I think up to PAT levels will take a bit of time, mainly because the finance costs that we have for the projects on the anvil further. But we see, because of our numbers, we see that most of it can be serviced by internal accruals and returns any which ways as we go along. So we're not worried about any finance issues because the funding part that we are well covered for, and because our numbers are growing and the revenues are very buoyant, we don't foresee any problems in that part.
Okay. As I understand, you've raised money from APG in the first tranche. But given that there is faster than anticipated recovery in a few segments in demand and lower debt repayment schedule as well, are you now in a better position to try and manage your liquidity without further dilution?
So as you would have seen our last analyst reports, we have said already that we will in all probability not activate their second tranche, because we're fairly comfortable that our cash flows will be able to protect and take us through. So we don't see any need for any other additional funding, at least in the next 18 to 24 months at all. We have already restarted our large project in Mumbai based on the confidence that we've got. So should not be a problem at all. And that's what our last report said as well. We don't foresee any problem because we will be fairly funded from the revenues and the profits that we create, because we've been, a bit of positive for the first 3 quarters, and this keeps going.
Okay. Then I have a question on, really where you see travel picking up over the summer. You mentioned autumn, but you still got this whole long summer ahead of us. And now that everyone's exhausted all of these leisure destinations, what do you anticipate over the next few months?
So I don't think everybody's exhausted all the destinations. You forget we have a large number of millions of people who in summer would have traveled abroad. And they're still waiting to travel. The bubbles haven't cleared up. I don't think there's a line of sight of anybody being able to go to Southeast Asia, to Europe. And so whatever growth we saw in resort travel, which was at that point of time called revenge travel, will be normal holiday travel in summer. Anyway, pan-India in summer, barring the mountain locations, general occupancies, range between 52 to 55%. I think they'll be better. And the resort locations in the hills will do well any which ways. And our seaside and beachside and forest resorts have done well already. And therefore, that's the reason why I'm very confident this summer should be a better summer, albeit that the rates will be about 30% lower than historical. But the occupancies, I believe, will be better than last summer. Remember, there's those many people that can go to Mauritius and Dubai and go Instagramming there. So.
Agreed. I absolutely see your point there. And I guess that's what everyone's doing right now, trying to explore domestic travel, despite the uptick in airlines and airline fares as well right now. In terms of events, weddings, MICE activities. On that front, are things picking up, or have we seen a stall given concerns around a resurgence of the coronavirus?
So interesting question. So a lot of the good Saya dates happened, December, January, and now largely in February as well. So those are continuing. Except the state of Maharashtra, I think most states don't seem to be so concerned. And what used to happen again was a lot of standalone hotels, clubs, and gardens used to be used earlier for weddings. Because of safety reasons, I think people are thronging more to branded hotels and branded resorts. So therefore, that business will continue. We saw a bit of a pickup in our conference market from from the corporate companies, more in terms of, again, restarting their training programs. I think that will continue as well, which has always been the classic base of travel during the summer. Will large events happen? I think the fear will be there. And to a certain extent, I hope the fear still remains there, because the only thing that will disturb us now is if the citizens, become a little more loose in their behavior, we're only inviting trouble for ourselves. But the market exists to be able to handle the growth in travel as we've seen, presuming that the states kind of keep this impact down. The more the vaccinations happen, particularly in the older group and onwards, I think the confidence in the corporate travel and other travel will also increase.
Rattan, good to have you on the show. Thank you so much for
Thank you. And my apologies,
joining in
my
today
connectivity
on the
issue at the
show
last
this morning.